I think we're entering an era where those footfalls are less likely. And that means I'm very optimistic on the upside. And I think we've removed a lot of the left-hand tail risk. I sort of think it's like there's never been a better risk-adjusted moment to buy Bitcoin than today. We still think it's going to 200,000. We think there's this structural mismatch between demand and supply. There's more demand from companies and ETFs than there is new supply. Econ 101 tells you price go up. We think it goes to 200K. So a lot of people who assume 2026 will be a down year. And I think that's probably not a good assumption. I think there are other forces that make me think 2026 will be a good year.
More and more investors, individuals and corporations alike, are losing confidence in the long-term stability of the US dollar. According to Hougan, this is a macro trend that's only accelerating. Whether it's concerns over debt, inflation, or geopolitical instability, people are looking for alternatives, and Bitcoin is increasingly the answer.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
More and more people are concerned about the long-term outlook for the value of the dollar, and they want to hedge. That could be an individual or it could be a corporation. So I think that's a trend that continues for a long time. I think Kathy's right about that. And this is an important trend. I think it's still accelerating, which I know is shocking to many people. Because there have been so many, but I think we're going to see a large number of announcements in the remainder of Q3 and into Q4. And then I think it's going to be a trend that comes and goes over time. I think maybe the next phase, you're going to see these companies wanting to do things with their Bitcoin. I think you're going to see a lot of them adopt option overlay strategies to generate income or lending strategies to generate yield. I think you're going to see these sort of evolve into almost permanent capital vehicles, like a hedge fund that's permanent capital that's designed to generate these returns. As an investment, the premium to NAV will vary over time. And I agree with people that some will trade to a discount. But I think this is a trend that continues for a number of years as sort of permanent capital vehicles doing things with Bitcoin. I think that's going to be the dominant trend that we see continue. I think for what it's worth, I think the forces that drove historical 4-year cycles are attenuated significantly. So I think the impact of the halving is smaller. I think the interest rate cycle is moving in Bitcoin's direction. I think blowups are less likely and smaller. So I don't think we'll have the same 4-year cycle that we've had in the past. But we haven't repealed volatility, right? And I expect significant drawdowns. Yeah, I think they'll be smaller. I think 70% drawdowns are a thing of the past. And, you know, if it pulls back significantly, I'll be buying. I just think it's not programmatically 4 years. I raised that because I think there are a lot of people who assume 2026 will be a down year. And I think that's probably not a good assumption. I think there are other forces that make me think 2026 will be a good year. But most importantly, it's just not programmatically a bad year, right? I think that's the point that I'm making. I think there's still a huge amount of upside. That's the really amazing thing about Bitcoin specifically, is we've removed all these risks, and it's still the case that most institutions don't have Bitcoin. So there's still a significant amount of upside. The other thing I would point out to people is many people look at the 4-year cycle in Bitcoin as what you described, which is this natural capital market cycle that resets and then we rebuild from there. Another way to look at it is it was driven at least in part by unnecessary footfalls by the crypto community, by Mt. Gox, by ICO, by FTX. And that argument would be said that if you follow that logic, what it means is the price of Bitcoin should be higher than it is today, right? We didn't actually need those setbacks. If we had managed the industry better, if regulators had been more proactive, if we hadn't had certain bad actors, we might be talking about $250,000 Bitcoin today. And I raise that because I think we're entering an era where those footfalls are less likely. And that means I'm very optimistic on the upside. And I think we've removed a lot of the left-hand tail risk. I sort of think it's like there's never been a better risk-adjusted moment to buy Bitcoin than today, because we remove some of that risk and we still have most of that upside. Again, there's still a lot of risk, still very volatile.
Yeah.
I could be wrong, but I'm really optimistic over the next few years. We still think it's going to 200,000. We think there's this structural mismatch between demand and supply. There's more demand from companies and ETFs than there is new supply. Econ 101 tells you price go up. We think it goes to 200K. Yeah, I think next year will be a good year as well. I don't have a specific price target. We'll put that out at the end of this year. We'll have to see how this year unfolds. But we think the limiting factor in Bitcoin's price right now is behaviorally driven sellers by old OGs in Bitcoin. So people who bought Bitcoin many years ago who are willing to sell it at certain prices. That's why we have a round number target. It's not incidental. We don't think there's a lot of people who want to sell at 120K. I don't think we're going to tread water here for a long time, even though seasonally this is a bad period for Bitcoin. I think we're going to move up toward the next sort of behavioral target, which is 200K. And then, yeah, I'm optimistic for 2026. Again, we'll put out our price target in December. We'll see how we do this year. It's worth noting that I think the chances of a giant pullback are much reduced. I think a lot of the biggest pullbacks in crypto have been driven by the lack of clear regulation, right? Mt. Gox, because we didn't have real custodians, ICOs because they were fraudulent and dumb, FTX because we didn't have regulated venues that people could access. And I think the proactive SEC and things like the Genius and Clarity Act diminish that risk going forward. But could we have a drawdown and could institutions sell? Absolutely. Institutions aren't a monolith. There's fast money and institutional money, and there is slow money, right? I think financial advisors are pretty slow money. I'll add a fun fact. Bitwise had inflows in 2018. We had inflows in 2022. I mean, net inflows. But we serve this financial advisor audience. So I think there's a mix. I do think the days of 70% pullbacks are in the past. I don't think the days of 40% pullbacks are in the past. I think that's entirely possible.
Hougan makes a powerful point about stablecoins. Contrary to popular belief, stablecoins aren't trying to disrupt Visa. They're disrupting weak global currencies. In nations facing double-digit inflation, stablecoins offer a lifeline, a way to preserve wealth, access global markets, and build a financial future. That's a net positive for the world. It's not about crypto killing fiat, it's about crypto offering better options where traditional finance has failed.
Diminished volatility because it reduces the risk, and it means dramatic increases in institutionalization because it removes that regulatory and reputational risk that kept people out of the market. So I think we're going to see really fast this integration of Wall Street and crypto. I think it's going to make some crypto people uncomfortable. I know it makes most of us a little uncomfortable, but I think it's going to happen really fast, right? We've already seen JP Morgan and Coinbase announce that you're going to be able to access Coinbase wallets within the JP Morgan banking app. I think as we get these regulatory agreements, you're just going to see these lines blur really fast. I think it's going to be good for growth. It's going to bring down volatility. I think it's mostly positive. Is my broad take. I will say I think it has a chance of creating a haves and have-nots in the crypto market. Right, they're going to be projects that are in the good graces of regulators under the Clarity Act, and then projects that are not. And I think you can see different valuation and different growth trajectories for those two kinds of projects. I think there are two risks to watch out for. So one is that anytime something like this works in Wall Street, and you know this from your background, people want to do it 20% bigger and 20% riskier. And so we always ladder up the risk curve until someone falls over the edge. And you're going to see this. You're going to see people who don't raise a mix of equity and debt like MicroStrategy did, but just take on debt. You're going to see people who take on debt at very high interest rates. You're going to see people who take on debt and add leverage positions to their Bitcoin because they're trying to stand out above the big names, above the ProCaps, above the Jack Mallers, above MicroStrategy. And to do that, they have to stick their neck out really high. And that will create a risk, and there'll be blowups, no question. The other risk is more prosaic, which is just, some of these will probably trade to a discount. And what happens then? I think the perception in the market is that these companies will sell their Bitcoin and buy back shares. I think that process will take much longer than people think, because that's almost an unwinding of those companies' purpose. I think that'll have to be forced by activists. And I think it's more likely that they'll trade to discounts and people will worry. And then the natural volatility of Bitcoin will push them in and out of premiums and discounts over time. So I think that risk may be overblown. The one I'm mostly worried about is this tendency for Wall Street to just overdo a good thing until it breaks. And I suspect that'll happen. I think you'll see more ways of owning it. I think you'll see more direct ways of owning Bitcoin. I think the ETFs will still be hugely popular. They're still a very efficient tool, and they fit into TradFi reporting. And there's a lot of legacy that it will take many years to overcome. Eventually, we'll move in that direction, and what will matter is IP. Bitcoin has its own IP. An index may have its own IP. That will still have value, but we're going to get more and better ways to own this, and the costs will continue to come down. Are you certain that the people who are building in the tokenization space will understand that versus going with the status quo, which is Ethereum, which has a lead? It's actually not always the best technology that wins in these user-specific applications. You can think of Betamax and VHS. Right back in the day, where Betamax was a better technology but failed because it didn't have the same marketing and distribution engine. And you look at BlackRock building on Ethereum and you're like, well, that could happen. So from an investor perspective, I think the answer there is uncertainty, which means that if you want exposure beyond money, if you just want the money aspect of crypto, just buy Bitcoin. I am a Bitcoin maxi from that perspective. But if you want the other things blockchains can do from an investor perspective, I think it makes some sense to diversify, just because there is more uncertainty in that statement than there is in the money statement, where I think the story has sailed. Well, when you can have one of the things that crypto does, it makes finance global and frictionless. Yeah. And so all of a sudden your choices aren't restricted. And when your choices aren't restricted, you want the best, right? If your choices are restricted, you go for what is easy and local. And I think it really points to that. People want the dollar. It's not a beautiful currency, but it may be the best that we have. And I do think, for what it's worth, another thing I was thinking about today is people have stablecoins wrong. They sort of see them as a threat to Visa. Maybe. They're a threat to terrible currencies globally, right? Yeah. That's what they're a threat to. The first place they're going to disrupt is an emerging market currency that's having double-digit inflation. That is who they're targeting. Not today, Visa. It's those emerging market currencies. And I think that's a great thing. Like, gives people better financial services, better products, more stable currencies on which they can build their lives. It's a huge good for the world.
We're in a structural transformation, one where Bitcoin is becoming a core pillar of global finance, volatility is moderating, and institutional adoption is rewriting the playbook. From 200K price targets to regulatory clarity, and from yield strategies to global disruption, this is no longer the Wild West of crypto. It's the beginning of something much bigger. If you found this breakdown helpful, don't forget to like, subscribe, and share it with others who want to understand where crypto is really headed.